I am Cesar Arias, Director of Public Credit and National Treasury at the Ministry of Finance in Colombia. Today, I want to talk about two important things. First, report progress on the approvals of 10 multimodal infrastructure projects through the methodology of public-private partnerships in Colombia. And second, we want to highlight the strength of our PPP model in terms of regulations, institutions, capacity to attract market financing, and also the advantages to accelerate the execution of these important projects. On the first issue, we just approved not only the distribution of risks between the public sector and the private sector, but also the financial conditions that will determine the financial closures of 10 multimodal projects. What do I mean by multimodal? For a long time, infrastructure was a synonym of roads in Colombia. And yes, we do have 6 of these projects in approval. But we also moved for the very first time in terms of 2 waterways in the country, river navigation projects, and also 2 airport concessions that we are going to be delivering. And this has 3 advantages. It has a higher multiplier of economic growth, is high intensive in employment generation, and third, it helps us to improve our competitiveness against peers in the region for trade and investment. These projects have been chosen with a very strategic sense. The first roads are very important to connect the center of the country with the main ports in the Pacific and the Atlantic coast. The other road projects are in the surroundings and the access to the main cities, not only the capital, Bogota, but also in the west of the country, in Cali. In terms of the airports, they have been also chosen because they have a strong multiplier on tourism. Those are our airports in San Andres and our airport in Cartagena, our main tourism destinations in the country. And finally, in terms of the navigation of our rivers, we have 2 projects. One, to recover the waterway system through the Magdalena River, and second, which is a combination of navigation and the preservation of the ecology of the habitat in this important Canal del Dique. Now, let's move a little bit about the comparison with other countries in the world. Colombia, as you see in this slide, has a system of public-private partnerships that is comparable with countries like the United Kingdom, and in emerging markets with countries like Philippines, Peru, and other leaders in the world like Australia, in terms of contractual management, private initiatives, structuring, and contracting of these projects. That was with the source of the World Bank, but we can also corroborate this with the latest report from the Economist Intelligence Unit, in which Colombia is second as an overall score in the world, fourth as an overall score in the world, and second in Latin America after Chile. One of the main features of our scheme is that it has a strong capacity to attract private investment. In this slide, you will see that we have 10 years, a decade, of the distribution between the public and the private. And you will see that it is almost 50% and 50% public and private. We also have tracked the positive elements of our PPP program, not only in the 4G generation, which were only roads, but also in the next generation of projects that I'm referring to today. And you will see the numbers in terms of CapEx, around $13 billion, in terms of jobs that are going to be generated, more than 500,000 new jobs, and also in terms of the kilometers that will be intervened either through greenfield or brownfield projects of around 2,500 kilometers. Now, Colombia has a very dynamic primary and secondary market for infrastructure. And what do I mean by this? In terms of the secondary market, we have nearly 15 projects that have achieved more than 90% of an execution rate, and they are now reducing construction risk and refinancing through institutional investors. We estimate that the secondary market of refinancing operations is in the order of $6.5 billion. But we also have a primary market, which are the new projects that are being bid in concessions, the 10 that I just mentioned. And we have positive news to report that out of those 10, the first 3 had been awarded. Maya Vial de Magic, which is a road network in the West, received 8 bids in this effort last year, and it was awarded. The second 2 are the access to the city of Bogota, the capital, through the south and through the north, which were also recently awarded in a competitive process. But we have, as we said, 7 more projects that are in the pipeline for bidding. Other advantages of our scheme is the capacity to have diverse sources of financing. In the first attempt, nearly 50% was coming, the funding, from the local banks. Now we have a complete split and diversified split between local banks, international banks, capital markets, debt and equity funds, and also the participation of our domestic local development bank. Important to say, in Colombia, we have 4 dedicated debt funds to infrastructure with large players in the world like Ashmore, like BlackRock, and local players in association with Credit Corp and Sura, for example. But we also have 2 equity funds, one led by the Canadian pension fund CDPQ, and another one also by the local players Credit Corp and Sura. Something that has been improving very fast is the capacity to issue securities in SPVs that are project finance. At the beginning, those securities were linked or denominated in dollars. Today, thanks to a liquid and well-developed local currency market, those bonds have been issued either in local currency or in local currency tied to inflation linkers. And you will see in this slide 6 or 7 operations that not only diversify in terms of currency and investor base, but that also had been 3 of them successfully launched social bonds in these project finance structures. Another thing that is gaining a lot of force in the local market is the distribution of risk between different players, whereby multilateral organizations like the Development Bank of the United States, DFC, or IDB Invest are anchoring and partially guaranteeing some of these SPVs, project finance, and are attracting then institutional investors and private underwriters locally and internationally. Finally, as we want to say, we have all these codified and institutionalized in our white policy papers, which we call Compass. And they are no longer general, they are specific. We have Compass for highway projects, for passenger rail systems, for airports, for freight, and also for river navigation projects. An important specificity of Colombia is that we, in addition to the insurance system for PPPs, we also have a contingency fund whereby the projects provision against the materialization of risk. This contingency fund today has a prudent ratio of coverage of 1:4, meaning every risk is provisioned for 4 times. And this is important because we are approaching, over the next 2 to 3 years, very important payments for revenue guarantees in traffic, for example, of the first concessions that we awarded. We have a lot of lessons learned. I'm not going to go into a lot of detail, but for example, we have learned that it is important to allocate within the capex of the projects at least 0.5% for social issues. We also learned that it's good practice to go for the social consultations before and not during or after the projects. We have defined fair clauses for termination when the contracts don't operate well between the public sector and the private sector, and recognizing the sources and uses that they were utilizing in these projects. We have accelerated CapEx. We have improved our risk valuation techniques, and we have also moved from a general revenue guarantee scheme to a more targeted guarantee scheme in terms of things like traffic. So finally, we understand infrastructure as a square in which the first part of the square is our responsibility as the government to have clear rules and policies for this. Second, we want a scheme that is able to attract public and private investment and local and international investment. Three, we have an important methodology to mobilize public resources, but also to mitigate and manage risks. And finally, we have an eye with the Transportation Ministry on the execution and a very strict calendar for deliverables and milestones in the execution of projects. What are the next steps in Colombia? Two things in terms of innovation: incorporating ESG consideration, environmental, social, and governance consideration in our methodologies to assess and manage fiscal risk. Second, to take advantage of technology and data in order to make more efficient the distribution of risks, the distribution of benefits, and the financial structuring and closure of these projects. And also, in terms of the securities market, we want to continue incentivizing the issuance of green bonds, of social bonds, and sustainability bonds linked to the evolution of these projects.